Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. Pacific on Saturday, July 22nd, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's get to that. Because tonight we will take a look into the murky world of cryptocurrency and the law. We'll also look at the latest twist in the Wright case, where he's attempting to claim copyright over Bitcoin. We'll also examine the Bitfinex hack plea deal that may be leaving money on the table. Next, we'll dig into the Department of Justice boosting crypto oversight with the merger of the National Cryptocurrency Enforcement Team. Then we'll explore how Ripple's chief legal officer is challenging the SEC's stance on tokens. Following that, we'll see how the Celsius network is nearing a settlement that could end its bankruptcy proceedings. Finally, we'll expose how terrorist groups, particularly those associated with ISIS, increasingly use cryptocurrencies for fundraising. It's a lot to unpack, but we'll cut through the jargon and bring you the straight dope. So let's dive right into it. In a surprising turn of events, Wright, who has claimed to be the inventor of Bitcoin since 2016, has been granted the right to argue in litigation that the Bitcoin file format is well defined enough to qualify for copyright protection. This decision by a British court reverses a previous ruling from February that considered Wright's arguments to be insufficient. Wright launched a lawsuit against 13 Bitcoin core developers and a group of companies, including Blockstream, Coinbase, and Block, alleging violation of his copyright to the Bitcoin white paper, its file format, and the database rights associated with the Bitcoin blockchain. Wright's claim is against a host of defendants associated with Bitcoin, including developers and several entities of the crypto exchange Coinbase. He argues the Bitcoin Satoshi Vision blockchain he created from another Bitcoin fork is the authentic blockchain behind the Bitcoin cryptocurrency. The Bitcoin Legal Defense Fund is a nonprofit established by former Twitter chief Jack Dorsey to assist developers facing lawsuits. It stated that this ruling only means that Wright should be allowed to argue that the Bitcoin file format is sufficiently well defined to receive copyright protection under the UK law. This decision does not address the question of whether the Bitcoin file format should receive copyright protection and whether that copyright, in fact, belongs to Wright. The case is expected to go to trial in early 2024, and whether Wright is indeed Bitcoin creator Satoshi Nakamoto will be determined then, at least in the legal sense. The Bitcoin Legal Defense Fund has cautioned the fact that the UK courts are allowing his arguments sets a dangerous precedent, where developers can be sued for violating the file format of open source software that someone else claims to have created. The case is quite the reminder of the ongoing legal battles and controversies surrounding the world of crypto. It's a world often seen as the Wild West, a frontier of financial freedom and innovation. But as this case shows, it is not immune to the reach of traditional legal systems and intellectual property laws. Wright's lawyers have acknowledged the high stakes of the case, stating that this ruling potentially affects all future use and marketing of Bitcoin and will prove to be a crucial development in intellectual property law. This case could have far-reaching implications for the crypto community and beyond. It's a reminder that while the crypto world might be a new frontier, it is not a lawless frontier. Ultimately, the question remains, is Wright really Satoshi Nakamoto? And if he is, what does that mean for the future of Bitcoin? Only time will tell, but one thing is for sure. This case is one to watch. It's a legal battle that could shape cryptocurrency's future and redefine intellectual property law's boundaries. As we move from the courtrooms of Britain and the claims of Mr. Wright, we transition to the back alleys of the internet and a tale of digital thievery. You might want to hold on to your digital wallets as we delve into the world of hacking. And hey, don't forget to like and follow us to keep up with all things crypto. In a significant development in the world of cryptocurrency, Ilya, Lichtenstein, and Heather Morgan have reached a plea agreement with the U.S. prosecutors. If this sounds familiar, you might remember she has a rapper persona under the name of Razzlekhan, and that's why this is the cover story for tonight. Now, the couple is infamous for their alleged involvement in laundering billions of dollars worth of Bitcoin. Bitcoin connected to the 2016 Bitfinex hack. That hack stole approximately 119,754 Bitcoin, which has appreciated to over $3.6 billion. Lichtenstein and Morgan are accused of laundering the stolen Bitcoin through a series of small, complex transactions across multiple accounts and platforms. The couple was arrested in New York in February 2022, and the seized Bitcoin represented the most prominent, largest financial seizure by the U.S. Department of Justice at the time. However, there's more to this story than meets the eye. A recent court filing reveals that U.S. government officials may be miscounting the amount of crypto they intend to seize from the couple. This discrepancy could be as much as $1 million. The document details the planned plea deal and asset seizure for the couple, but a blockchain analysis conducted by Blockworks suggests that U.S. officials might have undercounted the amount of crypto they could be seizing. This undercounting is due to omissions of funds in listed addresses, recent transfers between addresses, and interest gained from DeFi protocols. In one instance, an address listed in the document refers to roughly $1,997,000 in USDT deposited in Yearn Finance. The value of the deposits is now $2,053,000 after interest. This same address also contains USDC and Curve deposits on the leading marketplace Aave worth an additional $717,000, which is not mentioned in the document. The case is a clear example of the government's struggle to keep up with the rapidly evolving world of crypto. It's a testament to the power and potential of decentralized finance, but it also serves as a warning. While the crypto world offers unprecedented opportunities for financial freedom and privacy, it is not a lawless frontier, and those who misuse it for illicit activities will eventually face the consequences. As for Lichtenstein and Morgan, they might have thought they could outsmart the system, but their day of reckoning is coming. And for the rest of us, it's a reminder that the promise of crypto is not a license for lawlessness. From the dark web, our next tale takes us right to the doorstep of the Department of Justice. As we take this journey, remember to subscribe and share the Crypto Overnighter with your friends. The U.S. Department of Justice is ramping up its efforts to tackle cryptocurrency-related crimes. The National Cryptocurrency Enforcement Team, or NCET, initially launched as a dedicated unit for investigating such crimes, is now being merged into the Computer Crime and Intellectual Property section. Nicole Argentieri is the department's principal deputy assistant attorney general. According to her, this move is designed to bring NCET to the next level by providing it with more resources. This merger will effectively double the number of criminal division attorneys available to work on crypto matters. Argentieri emphasized the increasing intertwining of cryptocurrency work and cyber prosecutions. This is a trend she expects to continue in the future. Since it began in October 2021, the NCET has been instrumental in several enforcement actions, including a case against crypto exchange Bitslato for alleged money laundering violations. This move by the DOJ is a clear signal of the growing importance and complexity of cryptocurrency in the legal and financial landscape. The integration of the NCET into a broader computer crime division suggests a recognition of the multifaceted nature of crypto-related crimes, which often involve sophisticated cyber operations. The DOJ's decision to double down on its crypto enforcement efforts is a testament to the challenges and threats posed by the misuse of digital currencies. While the crypto community often champions the decentralization and freedom associated with digital currencies, this development really shows the potential for misuse and the need for robust regulatory oversight. In the grand scheme of things, this could be seen as a sign towards legitimizing the crypto space. By dedicating more resources and integrating crypto enforcement into its broader cybercrime efforts, the DOJ is acknowledging the permanence of cryptocurrencies and the need to understand and regulate them just like any other financial asset. From the quarters of power in the DOJ, we transition to the boardrooms of Ripple. In a world where every token could be a security, Ripple's chief legal officer has something to say. And if you're finding our show helpful, remember to like, follow, and subscribe. Stuart Alderoty, the chief legal officer of Ripple, has taken issue with the statements made by Gary Gensler during a congressional hearing. Alderoty accused the SEC chair of misrepresenting the law by asserting that tokens, in and of themselves, are investment contracts. Editor's note: you would think Gary would know better by now. The SEC chair's remarks were made during a hearing before the U.S. Senate Appropriations Committee. He suggested that many cryptocurrency tokens could fall under the jurisdiction of the Securities Act. This has sparked a backlash from Ripple's CLO, who criticized Gensler's stance, stating that it's outrageous for him to suggest that tokens, standing alone, are investment contracts. And when I said Gary should know better, that's because this comes on the heel of a landmark ruling in favor of Ripple. A ruling that determined programmatic sales of the XRP token could not be considered securities. Alderoty celebrated this verdict, stating that, quote, as a matter of law, XRP was not a security. Ripple CEO Brad Garlinghouse also commented on the importance of the decision, stating that it directly affects the SEC's claims that nearly all tokens are inherently securities, and that the ruling is likely to set a positive precedent for other digital tokens in the US. Now, as I see it, the SEC's stance on crypto tokens has been a contentious issue for some time now. The agency's assertion that many tokens could be considered securities has been met with resistance from various quarters of the crypto community. Ripple's recent victory in court, where it was ruled that XRP is not a security, is in fact a significant blow to the SEC's position. However, the SEC seems to be undeterred, with Gensler continuing to maintain that many tokens could fall under the jurisdiction of the Securities Act. This has led to a situation where the crypto industry and the SEC are at loggerheads with no clear resolution in sight. The ongoing debate raises several important questions. How will this impact the future of crypto regulation in the US? Will other digital tokens follow in the footsteps of XRP and challenge the SEC's assertions? And most importantly, how will this affect the average crypto investor? Leaving the world of crypto and the SEC behind, we move to the sphere of crypto lending. The Celsius network reached 2 settlements that could potentially end its bankruptcy proceedings. This is a significant development, as it could lead to the return of assets to customers who've been left in the lurch. The settlements will be reviewed by Judge Martin Glenn at a hearing on August 10th. They're expected to address a staggering $78.2 billion in unsecured claims. One of the agreements aims to resolve claims over accusations of fraud and misrepresentation by Celsius management. This is achieved by increasing customers' recoveries by 5%. Importantly, account holders can retain the rights to pursue individual claims against Celsius if they opt out of the settlement. The second settlement offers a resolution for customers with funds in Celsius Earn, a program that the SEC considers a securities violation. Under the proposed agreement, customers who borrow crypto funds will be able to receive a portion of their funds in crypto assets, along with compensation in new shares of the new company emerging in the bankruptcy proceedings. Celsius filed for Chapter 11 bankruptcy in July 2022, following a pause in all withdrawals amidst market turbulence stemming from the collapse of the Terra ecosystem. A year later, its former CEO, Alex Mashinsky, was arrested under criminal and civil charges of fraud and intention to manipulate the market. He has pleaded not guilty to all charges. On the same day of Mashinsky's arrest, the SEC filed a lawsuit against him and other Celsius executives for raising billions of dollars through unregistered and fraudulent offers, as well as selling crypto asset securities. The Federal Trade Commission also announced civil cases against the former CEO and issued $4.7 billion in fines to the lending platform for allegedly squandering billions in users' deposits after duping those users. This is a classic example of the risks inherent in the crypto industry, particularly for platforms that operate without sufficient regulatory oversight. It's a reminder to be cautious. Exercise due diligence before entrusting your assets to any platform. As we leave the realm of crypto lending, we plunge into the shadows where even cryptocurrencies are not safe. And remember, liking, following, and subscribing to the Crypto Overnighter motivates me to keep bringing you these important stories. In a recent report by TRM Labs, it was revealed that terrorist groups worldwide, particularly those associated with ISIS, are increasingly using cryptocurrencies for fundraising. The decentralized nature of these digital assets allow these groups to operate under the radar, raising significant amounts of money to support their activities. One of the most notable filings in the report was the use of Tether by pro-ISIS networks. In one instance, these groups were able to amass $2 million worth of USDT through a crypto exchange address in 2022. This money was used to recruit fighters in Tajikistan for an ISIS affiliate. The operation was successful due to the exchange's ability to identify the account operator through its Know Your Customer measures, leading to arrest of the person behind the campaign by Turkish authorities in June 2023. The report also highlighted other instances where cryptocurrencies were used to finance terrorism-related activities in Indonesia, Pakistan, and Afghanistan. In Indonesia, a pro-ISIS group raised over $517,000 using an account on a local exchange. These funds were supposedly for freeing ISIS members held in Syria internment camps. In Pakistan, ISIS affiliates raised around $40,000 over the past 12 months under the guise of helping earthquake victims in Turkey and Syria. These revelations underscore the dark side of crypto, a topic that's been a point of contention in the crypto community. While most crypto companies and exchanges have taken a strong stance against terrorism and related activities, the decentralized nature of these digital assets makes it challenging to completely eradicate their use for illegal activities. Binance reiterated its commitment to upholding its anti-terrorism stance. The exchange has more than 750 compliance-supporting employees with many prior law enforcement and regulatory agency backgrounds. These have helped law enforcement to freeze and seize more than $1 billion so far this year. Despite these efforts, the battle against the use of cryptocurrencies for illegal activities continues. So what happened? Craig Wright got a nod from a British court to argue his Bitcoin copyright case. It's a decision that could impact Bitcoin's future use and redefine intellectual property law. Will he be declared as Bitcoin's creator, Satoshi Nakamoto? We'll have to wait and see. Meanwhile, the notorious couple Ilya Lichtenstein and Heather Morgan reached a plea deal over their involvement in the Bitfinex hack. U.S. officials might have underestimated the amount of seized crypto by as much as $1 million. Their case shows that the government struggles to keep up with the fast-paced crypto world, but also that illicit activities will eventually face justice. In another major development, the DOJ ramped up its crypto oversight efforts by integrating the National Cryptocurrency Enforcement Team into the Computer Crime and Intellectual Property section. This move highlights the growing importance of cryptocurrency in the legal and financial landscape. Ripple's chief legal officer challenged the SEC's stance on tokens, following Ripple's court victory where it was ruled that XRP is not a security. Alderoty criticized the SEC chair for suggesting that tokens are investment contracts. This ongoing debate could have significant implications for cryptocurrency regulation in the U.S. Bankrupted crypto lender Celsius Network reached 2 settlements that could end its bankruptcy proceedings. The settlements address a staggering $78.2 billion in unsecured claims and offer a potential resolution for customers left hanging. Lastly, a report by TRM Labs revealed that ISIS and other terrorist groups are increasingly using cryptocurrencies for fundraising. This underlines the dark side of cryptocurrencies and underscores the need for robust regulatory oversight. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.